Hello everyone. All right, so just a quick review. As you can see, almost every day there is a turning point, right, in the market, depending on how small or big the ranges are, or basically the volatility, and that's about it. But even on slow days, we're seeing that there are turns and they're tradable. The only thing is, when you have small range days, you cannot have large profit targets. It's just not smart. But what you'll have is a lot of support and resistance trading. So I mean, that's fine. You can whether there's small ranges or big ranges, everything is tradable. But you must keep in mind, the ATR, the range from high to low. And if you do that and realize you're gonna get trades all day, every week, every day. So, not all day, but at least one or two turning points a day. That's typically normal. Anyway, so I'm going to go into what happened on the ES, and I'll show you what was I playing. Now the key thing here is this high. This was an up thrust, and the day where you had it felt like a flash crash. When was this? 12/20. That was 4 days ago. So the market fell really hard. After that, it went and fully retested this area. So if you were a smart short, you know that basically there's two places, and I keep saying this again and again, where the sellers are going to reattempt. Whenever they break a market, there's two spots. They love to defend these two spots. The first spot where you should always look is on the test of a breakdown. All right, it's a test of a breakdown. The second spot is the supply zone. This trade came all the way up to the supply zone. Where is the supply zone? It's basically the high bar or the bar right after it. It's typically the high bar or the red bar right after. Basically, it's either the green bar or the red bar right at the top. Some say it's the order block, blah, blah, blah. But listen, that's where there's sellers. All right. It's either that high bar right here or the bar right after it. So they are going to attempt, the sellers attempt. Why? Because they already are there. They did the break of this low, so that required pressure. That required heavy selling, and they also turned the pivot, so that requires supply overtaking demand. Two spots: the pivot, where supply overtakes demand, and the break. These are the two spots where if you look at any chart, you will see an increase in volume in these two places. Always. As a principle, it is not random. It is, as a principle, it's there again and again and again. All right. So this time they just went to that same spot, which was the origin of the rally, the down rally. This down rally, this origin's right here. So they tapped it, right? So once they tap it, you gotta see what's going on. So that's when we start looking at the wave chart. And typically, you're going to have some type of selling pressure. So the selling pressure came here. This is the biggest selling in 22 waves. The biggest selling in 22 waves from the origin of the bear rally. That means the sellers are still there. They are still there. All right. Now, one of the things I do is I need to see big bars as well, not just big waves, because as you know, a change of behavior, a sign of strength, sign of weakness, etc., they always have big bars originating from the start of the wave. This typically they have either volume off the bottom, or in this case volume off the top, or they have big range off the bottom or big range off the top in this case. Take a look at this bar. This bar is not really that big, but it is big in that this is the biggest down bar in at least 10 bars. It is the biggest bar, meaning in terms of up bars and down bars, in 11 bars. So basically this means that this is the biggest bar in approximately 1 hour. This is a 5-minute chart, but it's the biggest bar in at least 1 hour. So that's like the minimum threshold that I would take a look at. On a 5-minute, it has to be the biggest bar in at least an hour, or the biggest bar in at least like a bunch of green bars or red bars in this case. So there's pressure and it has follow through, and this break here is good also, meaning it's a break. So again, there's a second characteristic of change of behaviors. When they break a low, like in this case, this selling wave, when they break a low, they have a big bar, a breakdown within them. And on a case of an up wave, a breakout within them. That bar is typically quite large. When Wyckoff talked about it, he says it is the bar that breaks the back of the trend. This bar, for example, breaks the back of the uptrend, and it is part of the selling wave. So you'll see these two characteristics within the wave itself, within the change of behavior, or the the sign of weakness, whatever you want to call it. It has many words. I've heard other terms like Koch or something like that, change of character. It's all the same thing. It's just heavy selling off the top, which is basically selling positions being taken. All right. So typically you will see big bars at the origin of the wave. And if the wave takes out a low, a big bar that's taking out the low, which is the first breakdown. And that is the bar that breaks the back of the trend. So that's both there. Now, I'm going to speak a little bit more and tell you about the background of the change of behavior. From the first thing I said was its level that it's coming from, right? But now within this lower time frame 5-minute chart, typically you will see some type of overbought or a bunch of higher high, higher low, higher high, higher low, higher high, higher lows. Why? Because this TLQ means there's liquidity all underneath these waves, because this trend line liquidity, meaning higher low, higher low, higher low, it's very advantageous to take these lows, to run these lows. Because they're always higher lows and they're not correcting, meaning there's no complex correction. There's no springs, except for maybe this one. But in general, if you see higher low, higher low, higher low, higher low, it's set up for a move down, which would be very worth it. Why is that the case? It's the case because they are sell stops. So those sell stops, the buyers are in, they will sell their position. If it takes those sell stops, chances are it can have a bigger move down. So that's one of the things, and I'll go into that a little bit later, but the idea is there's a bunch of stops here. You can just like sell and cover your positions, etc. So it makes it a very nice higher low, higher low, higher low. It's a really good situation if you're bearish to take out all those lows. So the background of the change of behavior typically has these two characteristics. Now, there's a third thing that's important, which you're not going to find in a wave chart. This is why you need a tape reading chart or some type of footprint chart that can show you the volume. And here's the reason why. Typically, before, like right around the change of behavior or before the change of behavior, there will be distribution. And if it's a bullish change, there will be accumulation. I want to see this distribution and I want to see this accumulation if it's bullish. If it's bullish, I gotta have to see this accumulation. If it's bearish, I want to see this distribution. A wave chart will not show you this. So this is one of the things that you need some type of volume at price chart, whatever you want to call it. You need to see volume at price to show you, yes, there was distribution here. You want to see this, okay? So let me just go over this with the checklist. Okay, so the first thing, this is your change of behavior. What this does, you can also, maybe some folks know it as a change of character, others call it whatever the hell they call it, I don't know, sign of weakness, sign of strength, but it's just strong positions being taken. This is a CM, a composite operator, a composite man, heavy interest, take positions. So what are the things that help you identify these strong, heavy positions? And I'm going to go through a checklist. This is how you can identify, like, what they call A+ trades or B+ or something like that, A, B, and C trades. So you want the best ones, right? And you want to be able to say, yes, that is a change of behavior. Why? Because you're going to get an entire trend. Your reward for taking a position is an entire trend. That's like, typically it's like 4, 5, 6 to 1. So you can get, even on an intraday basis, you get a lot of reward relative to the risk, and sometimes it's much more than that. Anyway, and what was I? Okay, so the COB has either volume off the bottom, or if it's bearish, off the top, or it has, what is it? I don't know what to call it, thrust off the bottom. It's just a big bar. Thrust off the bottom, I'll just call it that. All right, you guys understand, I just mean a big bar with big spread. It should have this. If it does not have this, I'm thinking twice about taking the position. I need to see some other indications because something's not right. Okay? Why? Because if this is selling wave, the bar at the origin has to be big. Why? Because it represents high prices. Smart money will sell high. So their pressure, their selling, should first be initiated by a bar. That bar has follow through, which creates the selling wave. Again, the selling is first seen as a big bar, which then has follow through, creating a big selling wave. From a big selling bar to a big selling wave. So you want to see that big bar. It represents pressure, selling, money. That's what it is. 2, if it breaks, COB can also have a breakout or breakdown that breaks the trend. All right? So in this case, this is the bar right here. That's the bar that breaks the trends, the back of the trend. All right, I call it backbreaker. All right. Number 3. Oh, before we go any of this, I want to say COB always. I mean, it should be from a level. Okay. I'm going to go into this because I know where the turns occur. I know it already. And I'll also explain to you some other places where they can occur. But yeah, should be from it's typically from a SR level. That alternatively, it comes from a shortening of the thrust, an overbought, oversold condition. It can also be from, when I say overbought, oversold, you can also include climaxes in there. And what else? It comes usually from, there's one other situation I forgot. And yeah, effort, some type of effort or dullness. These are the alternatives. All right, but typically, almost all the time, it's going to come from support resistance level. It's going to come from shortening of the thrust. Happens all the time. I can show you over and over again. And yeah, and then other than that, overbought, oversold climatic conditions also created because they create very extreme prices, which smart money can take advantage of. And then also from either a lot of effort to go up that doesn't really go up, so it fails, or dullness. Dullness is just, it's the same thing as effort, but you're just thinking of it from a perspective of price and time instead of volume. All right, so this is where they come from. So this is the first thing you have to know. All right, if it's totally random, there's no level, no nothing, then you back off because it's just, you don't know what it is. Second, it has a volume off the bottom, volume off the top, or like a thrust off the bottom and top. This is very, very important, folks. This qualifies the change of behavior. In my opinion, it is like it will break in the decision-making process and the identification process. This will help me gauge that it really is a change of behavior, not just the levels, but I need this. Anyway, so next is change of behavior should also have a breakout or breakdown. If it breaks probably low like this, it should have a very clean break. Bang, like right there. See that? Should have breakdown with follow through. Do you have follow through? You have a break, red bar, and yes, you have follow through with a lower low, lower high, lower close. All right? All right. And then the rest of it is okay, typically I think that's about it. I don't want to overcomplicate it, but this really will. Okay, now there is something else actually I forgot to mention, right? This is change of behavior on the wave chart. Now, what do you want to see on a volume at price chart? This can be any footprint chart. Any footprint chart. So, I try to explain that I use the tape reading chart. This is just a footprint chart on a point and figure. That's all it is. It's volume on a figure chart. You can use a volume on any maybe I'll use candle, whatever, right? So what do you want to see on this chart? What you want to see is accumulation or distribution. This will do it. Why? Because and when that happens, you want to put and place your stop above distribution or below accumulation. It's because this is going to make it very challenging for the bulls to take it out. I mean, I'll show you right here. When I show you this selling right on the 20, it has the biggest wave in 22 bar. I already know it's a change of behavior, but let's say I'm not that certain. Let's say I'm like, maybe, whatever, right? This right here, this red bar, has the biggest volume in 30 red bars right at the high. This little area. Why? It's because this is distribution. You see this base? That 41 and 33 is 41,000 contracts plus 33,000 contracts. And here's the key. It needs to be taken out. it needs to be broken. Once this is broken, all of this volume in my mind has to be distribution. This because, and the reason is, if you look at your chart again and again, you will see, and even Wyckoff mentioned this in his first study, that if this volume is really smart money, you cannot go below it. They will not let you go below their position. If this volume is actually buying by smart money, it's because they anticipate higher prices, not lower prices. But what we see after this volume is a break where prices go to lower prices, making this a place to establish their short positions, 41,000 and 33,000 just in this area alone, 74,000 contracts, and then break. Meaning this is distribution. Why? It did not hold. Prices did not hold. They went lower. Because they went lower, we have distribution, which is part of our change of behavior. This change of behavior here has distribution in the background. What happens? If you have a change of behavior with distribution in the background, that is excellent. You can put your stop right above it, and chillax, because it means that the buyers will not only have to take out this big wave of selling that was the biggest in 22 waves, but they will also have to absorb all of this distribution in order to go higher. And it's not easy to do. It's better to bring prices lower, accumulate, and then go up and take it out. It's not worth it to take it out here. There's already at higher prices at top of the trend. So that's why this is part of the list. Okay. So what do you want to see on a volume of price chart? You want to see accumulation and distribution, accumulation or distribution taken out. So basically, distribution and followed by a breakdown, or okay, so this is selling. So you want distribution, which is right here. I'm showing you 41 and 33 together, the biggest bar in 30 red bars right up here, and it is taken out here. So this is your distribution followed by the breakdown. After that, so what the hell did I do? Stops can be placed above right? After that, even on this thing, you know, when prices come back to this area, more distribution and continued breakdown. Okay, so this is a study that I'm showing you on the wave chart using also the what is this tape reading chart. It's called a tape reading chart. That's what Wyckoff, I think Wyckoff or SMI, one of them called it that. And this is what this shows you. The wave chart cannot show you, at least not in a quantified way like this. Cannot show you that. That's why you want both. You want the wave, and then you want this chart, Because if you see that distribution there and then a break, you have an edge. If you see the distribution and then the break, it gives you a great place to put your stops, and it allows you to trade with the smart money. They establish their position here. It then gets retested. You could put you have the opportunity then to put your positions basically in the area that they put their positions. You're trading with the smart money. That's what I wanted to explain to all the Wyckoff traders, right? Anyway, let's take a look. So this was in what is it called? The ES. Let's take a look at so crude actually set up like multiple trades because the range is tight. Again, you're gonna get multiple trades. You just have to make sure get the hell out quick, right? So first was this selling wave. Selling wave here got tested and puked. Then the buying wave pulled back and tested. This buying wave has your big bar thrust off the bottom. That thrust is the biggest in 88 waves. 88 waves, folks. I mean 88 bars. So then it gets tested, and of course the ranges are small, so you're not going to get a big move. You just get it to go to resistance. Basically it just takes out resistance. So it's just support and resistance trading. This is how it's done. This is resistance, sell to support, buy to resistance, and then eventually it breaks hard. Now again, the key here, give me 1 second. Okay. So now looking at this, can you identify where the distribution is? Remember, distribution is always near the high. So this is it. Now, after the breakdown, can you identify where the redistribution is? Can you identify where you would be sure that it's redistribution? Because as I explained, you need to have a break. It has to be at a high, or in this case, a pullback high. And then there has to be a break. It has to go lower. So where's the confirmation? The confirmation of this would probably be this break. And the confirmation of this would be this lower low. It means the price pull back, distributed, broke. Now, I mean, if we were still trading now if it came back to this area, we have a very hard time. And because, for example, here, this little range has big volume. This little two box bar has the biggest up volume in 18 bars. This pullback right here has the biggest up volume in 18 bars. This little thing right here. You need a break, and then you can get it on the retest. All right, that's all, folks. Have a good, happy holidays and New Year. Thank you. Bye.